Hey everybody, it's Brian from Alpha Trends here. Today is Wednesday, the 7th of August, and we had a continuation back down in the markets here today. A little less than 1% sell-off, but well off of the morning highs where it gapped up. We had a weak close yesterday, and then that gap up brought us right to the 38.2% retracement of the recent high to the Monday low. So that was 38.2%. And of course, we're below a declining 5-day moving average. So the strength of the last couple of days was okay for day trades, but was definitely not to be trusted because of that declining 5-day moving average. We also have the anchor, not from the month to date, but from this point right here. And I changed it from the month to date to the gap here because this is where we trapped a lot of people. And the sentiment from that point is more important than the month to date anchor. So, there's an art to all technical analysis, including where to set the anchor. And it took me a little bit to realize, wait a minute, why aren't I measuring from that point? Because again, that's where we had that gap up that failed and led to this most recent leg lower. I have been looking for and still am looking for at least a test of the low before we can get a real turnaround. Maybe we find some supply at the anchor off of Monday's low and then start to do something like this. If that happens, well, the 5-day moving average will of course look like this. And then if we just simply go down and undercut this low and then make a quick reversal back up into here, what that would accomplish is all the people who have their stops under here would be stopped out, and then other people who are basically emotional sidelines, late to the party on the short side, would be thinking, hey, I've got to get involved on the short side. And that is basically the dumb money. If that's part of you, I'm not calling you dumb, but people call institutions smart money. They are not smart money all the time. The smart money is on the right side of the trend for their time frame. The intermediate term time frame continues to be lower, and a shakeout below that low would, I think, pave the way for a more sustainable bounce that maybe we see something along the lines of this, and then to continue higher. And then we could start to look for anchors like this one to provide potential resistance, or from the all-time high. But that's thinking too many steps ahead for right now, but that's the way you've got to think about this market. Now, tomorrow we have the jobless claims in the morning. Maybe it's going to gap up and fail. Maybe it's going to gap up and continue higher. I kind of am skeptical of that because why? Because the declining 5-day moving average, even if we have a big up day tomorrow, and let's say we close right here, that 5-day moving average will still be declining because we'll be getting rid of this data in that 5-day moving average calculation. Let's take a look at the NASDAQ. Same kind of story here, and I've previously sketched that out for Alpha Trend subscribers. I do this analysis every single day for Alpha Trend subscribers, and occasionally on YouTube, every Friday, but occasionally Wednesdays like today. Anyways, in here we haven't seen a 38.2% bounce. That's what this line is. From this high to this low, 38.2 would have taken up to 455. Instead, we came right to the anchor from that failed gap up last week. That was perfect place for supply to be released, and I'm hoping it does something like this. I'm hoping for a new low. The Russell 2000, there's still no reason to be a buyer in there. In fact, I think it's going to take quite a while to heal the damage that's been done from this failed breakout back into this range. I see people pointing to, hey, we're at the 200-day moving average in this prior resistance, but this failure is much more important than thinking that this market's about to turn around anytime soon. It's going to need to repair a lot of damage that's been done. The semiconductors have continued to lead up and down. This market closed well below the anchor from Monday's low, whereas other markets closed a little bit closer to it. So they've been the leaders on the upside, and now they are continuing to be on the downside, down over 30% year to date. Where did they fail today? Right at the declining 5-day moving average, right at the anchor from that gap up last week, and it was pretty much a full day sell-off in there. We were below the anchored volume weighted average, the daily volume weighted average price, that's that blue line, almost the entire session. So guilty until until proven innocent. Well, we're below declining 5-day moving average. I say it all the time, and that's the way I always look at these markets until proven otherwise. Biotechs are a complete waste of time. They've been destroyed. They're going to need a lot of time to heal from this sell-off. Financial stocks, they came down and hit the double top measured move that we were talking about. So that was hit perfectly along with the year-to-date anchor. And maybe you traded them for a bounce, but it's a bounce because we have a declining 5-day moving average. Don't trust rallies with a declining 5-day moving average. The bond market had a big rally last week and opened up on that big gap Monday, but has undergone profit taking since. I think that, I was looking for the potential of a reversal up in this area, or perhaps if it had some legs to continue up to the anchor from this peak right here. Instead, it's pulled back. It broke the pattern of higher highs and higher lows on the intermediate term. So now it's just in pullback mode. It's going to need to repair before the bonds can continue to move higher again. And let's talk about Bitcoin, because at the end of the video last week, I spoke about, on Friday that is, that I was long some Bitcoin, and I had mentioned that I was going to have a tight stop on that. Well, fortunately, I didn't cover, but I honored that stop, and as it broke back below that 63.5 level, 63.7 I think is where I sold it, I avoided this carnage. It was a very small loss. I bought it with a declining 5-day moving average. I thought it would be a bigger level of support in here, so small losses are part of the game. Today, we rallied up to the 38.2% retracement of this decline from that $70,000 level to to $50,000, and we came right up to the 38.2% retracement and the declining 5-day moving average. Now it's testing the anchor from this low last week. I would like to see the same thing, perhaps an undercut of this low and then a reversal. I've got an eye on it here, but I'm certainly not ready to be a buyer of really any of these markets. Cash is a position.